everyone, welcome to your personalized deep dive. You know, it's obvious that you are serious about building wealth and not just those flashy overnight riches.
Right.
You want to create a solid financial future. And judging by the podcasts and books you sent over, it seems like you're ready to dig deeper.
Yeah, definitely.
So we're talking real strategies, a sustainable approach. You ready to get into it?
Absolutely. Let's go.
Okay, so let's dive into these sources and pull out those golden nuggets.
Sounds good.
One thing that really stood out to me was from the Wealth Building podcast was how they just totally debunked all those get-rich-quick schemes. Some of those stories were crazy.
Yeah, they were wild. It's easy to get caught up in the hype, but real wealth takes time and effort. You know, you got to avoid those traps that can really set you back.
Yeah, for sure. And, hearing about those Ponzi schemes and those crypto rug pulls, it's a good reminder that if something sounds too good to be true, it probably is.
Oh, yeah, 100%.
It's so easy to get caught up in all the excitement, especially with all the noise on social media these days.
For sure.
The story about the Terra Luna crash, that one really hit home for me. I mean, billions of dollars just wiped out in days.
It's crazy.
It's a huge wake-up call for anyone who thinks they can get rich quick.
It really highlights the need for a solid strategy. If those investors had diversified and, avoided chasing the hype, they probably would have weathered the storm a little bit better.
That actually ties in perfectly with something else from the Wealth Building podcast, the Slow and Steady Wealth Playbook. I really like that concept.
Yeah, it's all about building a strong foundation for the long haul.
Okay, so let's talk about that foundation. The podcast had some pretty straightforward starting points, automating your savings, investing in index funds. It sounds simple enough, but is that really all it takes?
Not quite that simple, but those are definitely key components. Think of them as the building blocks of a solid financial plan.
Right.
What I found fascinating was they used this example of investing just $100 a month, which doesn't sound like a lot. But over 40 years, thanks to the magic of compounding, it could potentially grow to $1 million.
Wow, that's incredible. So I guess consistency really is key.
Absolutely.
But they didn't just stop at the basics, right? They also mentioned things like diversification, Roth IRAs, even touched on more advanced strategies like tax loss harvesting. Do you think it's important to jump into those more complex strategies right away?
It's great that you're already thinking ahead, but I'd suggest mastering the fundamentals first. It's like learning to play an instrument. You wouldn't jump straight into complex compositions before understanding the basic notes and chords.
Yeah, that's a good analogy.
Yeah.
So start simple, build a solid base, and then gradually layer in those more sophisticated strategies as you gain experience.
Exactly.
But how do you even know where to start? They threw out a bunch of terms and ideas, and it's a lot to process.
Well, that's where that 5-step plan from Wealth Building comes in. It's a clear roadmap to help you navigate the process. They start with building an emergency fund, which, is crucial for unexpected expenses. They even recommended Ally Bank for their high-yield savings accounts.
Yeah, getting that safety net in place just makes a lot of sense. I'm guessing tackling high-interest debt is the next step, credit cards before student loans.
You got it. Once you got a handle on it, it's time to really dive into investing. They recommended allocating a portion of your income to a diversified portfolio that includes stocks, crypto, and real estate.
Okay.
They even got specific, suggesting VOO for stocks, BTC for crypto, and REITs for real estate. What did you think about that mix?
Honestly, I was a bit surprised by the crypto allocation.
Yeah.
30% seems a bit high to me, especially for someone just starting out. Crypto is known for being pretty volatile, right?
It's definitely more aggressive allocation, and I might not be suitable for everyone. It all comes down to your personal risk tolerance. Remember, you've already been exploring some wealth building books. What has your research shown you about risk tolerance and portfolio allocation?
That's a great point. I have been reading a lot about finding that balance between risk and reward. Maybe 30% is a good starting point for someone who's comfortable with that higher volatility, but it's probably a good idea to adjust that based on your own individual circumstances.
Right.
But what about continuous learning?
Yeah.
They emphasize that quite a bit. It seems like staying informed is crucial in this ever-changing financial landscape.
It's absolutely essential, and they were really big on choosing books over TikTok gurus for a reason. It's about building a solid understanding, not just chasing the latest trends.
Yeah, that reminds me of something else that resonated with me, the importance of mindset. The Wealth Builders Mindset podcast really delved into the psychological aspects of wealth creation. It's not just about the mechanics of investing, right? It's about developing the right mindset to make those smart decisions and navigating the ups and downs of the market.
Precisely one thing that really stood out to me was their discussion of emotional biases, like loss aversion and confirmation bias.
Yeah.
They can really trip us up if we're not aware of them.
It's like our brains are wired to sabotage our financial goals sometimes.
Yeah.
So how do we combat these biases? Do you have any strategies or tips for recognizing and overcoming them?
Well, the first step is awareness.
Yeah.
Recognizing that these biases exist is crucial. From there, it's about developing strategies to mitigate their influence. For example, having a written financial plan can help you stay focused on your goals and avoid those impulsive decisions driven by fear or greed.
That makes sense. Having a plan in place can help you stay grounded when things get turbulent. It's like having a roadmap for your financial journey.
Exactly. And remember, it's not a set it and forget it kind of
No.
thing. You need to be actively involved and make adjustments as your life and the market evolve.
That actually leads me to another question. They talked a lot about discipline and patience in Wealth Builder's mindset. But for someone like me who tends to be a bit impulsive, how do you actually develop those qualities? It's easier said than done, right? Especially when you see all those flashy headlines about people getting rich quickly.
It's definitely a challenge, but it's not impossible.
Mm.
It starts with recognizing your own tendencies and developing strategies to counteract them.
Uh-huh.
For example, if you're prone to impulsive buying, you might want to implement a cooling off period before making any big purchases.
So taking a step back and really evaluating whether it aligns with your financial goals,
Exactly.
I can see how that could be helpful. But what about discipline when it comes to investing? How do you avoid getting caught up in the FOMO and making those rash decisions?
That's where having a clear investment strategy comes in. Having a written plan can help you stay focused on your long-term goals and avoid getting swayed by those short-term market fluctuations. It's about sticking to your plan even when things get bumpy.
Okay, so sticking to the plan, being patient, and recognizing those emotional biases, that's starting to paint a picture of what a wealth building mindset looks like.
Exactly. And remember, this journey is a marathon, not a sprint. It's about making consistent progress over time, not chasing quick wins. What do you think about that concept?
It makes a lot of sense, especially after hearing some of those cautionary tales from the wealth building podcast. I'm starting to see how important patience and discipline are in this game, but I'm also curious about something else they mentioned, wealth beyond just money. They talked about things like time freedom, giving back, and sharing knowledge. I'm curious to hear your thoughts on that. I mean, is it really possible to achieve those things through wealth building?
Absolutely. And that's what makes this journey so exciting. It's not just about accumulating money. It's about using that wealth to create a life that aligns with your values and priorities.
Nah.
For example, they talked about using investment income to buy back your time, essentially regaining control over your schedule. Does that idea appeal to you at all?
It definitely does. I've always valued flexibility and freedom. Being able to use my investments to create more time for the things I love would be incredible.
And what about giving back? They suggested donating a portion of your wealth to causes you care about. What are your thoughts on that aspect of wealth building?
I think it's a crucial part of the equation. It's not just about personal gain, it's about making a positive impact on the world around you. And frankly, it makes the journey much more meaningful.
Absolutely. It's about recognizing that true wealth encompasses more than just monetary assets. It's about living a life of purpose and using your resources to make a difference. But before we get too far ahead of ourselves, let's circle back to the practical side of things. I think it's time to dive a bit deeper into those specific investment strategies you mentioned earlier. Let's start with stocks. What exactly are they, and how can we approach investing in them in a smart and informed way?
That's a great idea. Stocks are a fundamental part of any diversified portfolio, and understanding how they work is crucial for building long-term wealth. Let's dive in. All right, let's unpack this whole stock thing. I get the basic idea. You buy a share of a company, and if the company does well, your investment grows. But I'm curious what actually drives stock prices up or down.
It's a complex interplay of factors, but ultimately stock prices are driven by supply and demand.
Mm-hmm.
When more people want to buy a particular stock than sell it, the price goes up.
Makes sense.
Conversely, if more people want to sell than buy, the price goes down.
Okay, that makes sense. But what influences those buying and selling decisions? Is it just about a company's performance?
Company performance is definitely a major factor when a company is profitable, and growing investors are more likely to buy its stock, driving up the price.
Mm.
But there are also external factors at play, like interest rates, economic conditions, even geopolitical events can have an impact.
So it's not just about picking a company with a good product or service. You also have to consider the broader economic and political landscape.
Yes, exactly. Investing in stocks requires a holistic understanding of both company-specific factors and those macroeconomic trends.
That sounds like a lot to keep track of. No wonder they recommend diversification. Speaking of which, they specifically mentioned VOO as a good option for stock investments. Can you remind me what makes VOO so special?
VOO is an exchange-traded fund, or ETF, that tracks the S&P 500 index. Think of it like a basket of stocks that represents the 500 largest publicly traded companies in the U.S.
Okay.
When you buy VOO, you're essentially buying a tiny piece of all those companies.
So instead of trying to pick individual winning stocks, which seems pretty daunting, I can just invest in VOO and ride the overall market trend. That sounds a lot less stressful. But honestly, part of me still wonders if picking individual stocks might lead to bigger gains. What are your thoughts on that?
It's true that individual stocks have the potential for higher returns, but they also come with higher risks. It takes a lot of research and expertise to consistently pick winning stocks. Yeah. VOO, on the other hand, offers built-in diversification and has historically provided solid returns. Remember what Jack Bogle said in the podcast, don't look for the needle by the haystack.
Right. It's about playing the long game and not getting caught up in trying to time the market or pick the next hot stock. But what about the other investment they recommended, BTC for crypto? That world seems even more complex and risky than the stock market.
Cryptocurrency is definitely a different beast. Bitcoin, or BTC, operates independently of any central bank or government. It's a decentralized digital currency that relies on a technology called blockchain to record and verify transactions.
So no banks or governments involved. It all sounds very futuristic and a bit mysterious, but why would someone choose to invest in something so different from traditional stocks?
There are a few reasons. Some see it as a hedge against inflation, as the supply of Bitcoin is limited. Others are drawn to its potential for growth, as its value has increased significantly over the past decade. And some simply believe in the technology and its potential to disrupt traditional financial systems.
So it sounds like there are a lot of potential upsides, but also a fair amount of risk. They even mention a few books for further research on the topic.
Yes, they recommended The Bitcoin Standard for a deeper dive into the history and economic principles behind Bitcoin. And for those interested in the technical side, they suggested Mastering Bitcoin.
Okay, so stocks and crypto, two very different investment options, each with its own set of risks and potential rewards. What about the third asset class? They mentioned REITs. I remember they were recommended for real estate. Are those like stocks, but for property?
Exactly. REITs, or real estate investment trusts, allow you to invest in real estate without actually buying and managing properties yourself.
Oh.
They own and operate income-producing real estate, like shopping malls, office buildings, and apartments.
So it's like owning a tiny piece of a skyscraper or a shopping center. That sounds a lot easier than dealing with tenants and property taxes. But how do REITs actually generate returns for investors?
They generate returns in two ways, through dividends and through appreciation in property value, just like companies pay dividends to stockholders. REITs distribute a portion of their rental income to shareholders, and as the value of the underlying properties increases, so does the value of the REIT.
So I could potentially benefit from both rental income and property appreciation without the hassle of being a landlord. That sounds pretty appealing, especially for someone like me who isn't exactly handy with the toolbox. But how do I choose which REITs to invest in? Is it similar to choosing stocks?
There are definitely some parallels. You'll want to research different REITs, looking at their portfolio of properties, their track record, and their management team. There are also specialized REITs that focus on specific sectors like healthcare or technology, so you can tailor your investments to your interests or market outlook.
Okay, so stocks, crypto, and REITs. We've got a pretty diverse mix of investment options here, but I'm still trying to wrap my head around how to put it all together. How do you determine the right allocation for each asset class? I mean, 30% crypto might work for some, but it's probably not the best approach for everyone, right?
You're absolutely right. The optimal asset allocation depends on a number of factors, including your risk tolerance, your time horizon, and your financial goals. Remember that written financial plan we discussed earlier, that's where you'll define your investment strategy and determine the right mix of assets for your unique situation.
Right. It's not a one-size-fits-all approach. Everyone's financial journey is different. But I'm curious, beyond diversification and asset allocation, are there any other key principles or strategies that stood out to you from these sources?
One thing they emphasized repeatedly was the importance of staying informed and adapting to change. The financial landscape is constantly evolving, so it's crucial to keep learning and adjusting your strategies as needed. Remember how they talked about the rise of index funds and how that revolutionized the investing world? Well, who knows what the next big innovation will be, being open to new ideas and approaches is essential for staying ahead of the curve.
That's a great point. It's not about setting a plan in stone and never deviating from it. It's about being flexible, staying curious, and continuously learning. But with all this talk about investing and growing our wealth, I don't want to lose sight of the bigger picture. I mean, what's the point of all this if we're not using our wealth to create a life we love? Remember how the Wealth Building podcast talked about wealth beyond just money? They mentioned things like time freedom, giving back, and sharing knowledge. How do we make sure those values are reflected in our financial journey?
That's a great question, and it's one we should all be asking ourselves. It's easy to get caught up in the numbers and lose sight of what truly matters. But remember, wealth is a tool, not an end in itself. It's about using that tool to create a life that aligns with your values, your passions, and your goals.
I love that perspective. It's about using wealth as a means to achieve something greater, not just as an end goal in itself, but it's easy to say that, right? How do we actually put it into practice?
It starts with defining what true wealth means to you. What does a fulfilling and meaningful life look like? Once you have a clear vision, you can start aligning your financial goals and strategies with that vision.
So it's about being intentional with our wealth, using it to support the life we want to create. But I'm curious, what are some practical steps we can take to ensure we're not just chasing money for money's sake? I mean, they gave some concrete steps for investing. Are there similar steps for aligning wealth with values?
Absolutely. Just like you create a financial plan, you can create a life plan that outlines your values, your goals, and your aspirations. Then you can start integrating those elements into your financial decisions. For example, if time freedom is important to you, you might prioritize investments that generate passive income, so you could eventually reduce your reliance on a 9-to-5 job.
So it's about viewing our investments not just as a way to grow our wealth, but as a way to fuel our dreams and create a life that reflects what truly matters to us.
Exactly. And remember, this journey isn't just about individual gain, it's also about using your wealth to make a positive impact on the world around you, whether it's donating to causes you care about or sharing your knowledge and resources with others. There are countless ways to use your wealth to make a difference.
That brings me back to those inspiring stories from the Wealth Building podcast. They featured people who weren't just financially successful, but who are also using their wealth to make a positive impact. It's a great reminder that wealth can be a force for good, but let's be honest, building wealth and managing finances can feel overwhelming at times. There are so many moving parts and so much information to process. Do you have any advice for staying motivated and avoiding burnout on this journey?
It's crucial to remember that this is a marathon, not a sprint. It's about making consistent progress over time, not trying to do everything at once. Break down your goals into smaller, more manageable steps, and celebrate those milestones along the way. And remember to seek support and guidance when you need it, whether it's connecting with a financial advisor or joining a community of like-minded individuals. Having a support system can make all the difference.
That's a great reminder. It's about building a sustainable approach, not burning ourselves out in pursuit of quick wins. But, we've talked a lot about the strategies and the mindset, but one thing we haven't really touched on is the emotional side of money. I mean, it's a topic that can bring up a lot of complex feelings for people. Do you have any insights or advice for navigating the emotional challenges that often come with wealth building?
That's an excellent point.
Yeah.
Money is often tied to our sense of security, our self-worth, and our relationships with others. It's important to be aware of those emotional connections and to approach money with a healthy and balanced mindset.
Do you have any specific tips for developing that healthy mindset? I mean, it's easy to say don't let money control your emotions, but in reality, that's easier said than done.
You're absolutely right. It takes practice and conscious effort. One helpful strategy is to focus on what you can control. You can't control market fluctuations or economic downturns, but you can control your spending habits, your savings rate, and your investment decisions. Focusing on those areas can help you feel more empowered and less anxious about things that are outside of your control.
So it's about shifting our focus from worry and scarcity to action and abundance. I like that.
Exactly. And remember, this journey isn't just about reaching a specific financial destination. It's about personal growth learning and creating a life that is both financially secure and personally fulfilling.
Well said. And speaking of fulfillment, we've covered a lot of ground today, from the nitty-gritty of stocks and crypto to the importance of aligning wealth with values. But before we move on to part 3, where we'll delve into even more advanced strategies, I think it's time for a quick recap of those recommended books. They're a treasure trove of knowledge.
Yeah.
Okay, so let's talk books. For someone who is already digging into podcasts and books on this topic, I bet you have some favorites.
Oh, for sure. There are a few that have really stuck with me.
Yeah.
One that always stands out is The Intelligent Investor
Yeah.
by Benjamin Graham. It's a classic for a reason.
Oh, yeah.
Graham lays out this value investing approach that has stood the test of time.
That's actually one I haven't gotten to yet. What is it about the value investing approach that you find so compelling? It seems like everyone's chasing growth stocks and the latest trends these days.
Yeah, it's a different mindset. Value investing is about finding those companies that are undervalued by the market.
Hmm,
It's a more patient and disciplined approach.
right.
It focuses on fundamentals, not hype. And Graham provides a framework for analyzing companies and identifying those hidden gems.
So it's less about following the herd and more about doing your own research and finding those diamonds in the rough.
Exactly. And that brings us to another excellent recommendation, One Up on Wall Street by Peter Lynch.
Oh, yeah.
Lynch, legendary fund manager, shares his insights on how individual investors can gain an edge, by leveraging their own knowledge and experiences.
Yeah. So it's about connecting your investments to the real world and leveraging your own insights to make informed decisions.
Precisely. And for those interested in technical analysis, which uses charts and patterns to predict future price movements, they recommend Technical Analysis of the Financial Markets by John Murphy.
Right.
It's a comprehensive guide to the tools and techniques used by technical traders.
Yeah, that's definitely one for the more analytical minds. But, trading can be an emotional roller coaster.
Oh, for sure.
They recommended Trading in the Zone by Mark Douglas, which seems to address that psychological side of things.
Absolutely. Douglas really delves into the mental game of trading,
Yeah.
emphasizing the importance of discipline, emotional control, and developing that winning mindset.
It seems like that mental aspect is just as important as the technical skills when it comes to trading.
It really is. It's about mastering your emotions and avoiding those impulsive decisions that can derail your plan. And of course, we can't forget about cryptocurrency. They recommended The Bitcoin Standard by Safety Amos, which provides a historical and economic perspective on Bitcoin and its potential impact on the world.
That one has been on my list for a while. It seems like everyone is talking about Bitcoin these days, but I'm still trying to wrap my head around what it all means.
Yeah. Amos provides a thought-provoking analysis of Bitcoin's role as a decentralized and potentially transformative form of money.
So it's not just about the price fluctuations and the potential for investment gains. It's about understanding the bigger picture and the potential societal impact.
Exactly. And for those who want to delve into the technical details of Bitcoin, Mastering Bitcoin by Andreas Antonopoulos is a highly recommended resource.
Okay, so it sounds like these books offer a wealth of knowledge for anyone looking to expand their financial literacy and explore different investment approaches. But with all this talk about strategies and resources, I don't want us to lose sight of the most important takeaway from our deep dive today. Building wealth is a means to an end, not the end itself.
100%. It's about using our financial resources to create a life that aligns with our values, our passions, and our goals. Whether it's achieving time freedom, giving back to our communities, or simply spending more time with loved ones, it's about using wealth as a tool to build a life we love.
So as we wrap up this deep dive, let's remember that the journey to financial well-being isn't just about numbers and spreadsheets. It's about personal growth, making informed decisions, and creating a life that is both financially secure and deeply fulfilling.
Couldn't have said it better myself.
Yeah.
It's about embracing the process, staying curious and continuously learning, and most importantly, remembering that true wealth is measured not just by our bank accounts, but by the richness of our lives and the positive impact we make on the world around us.
Well, this deep dive has been an incredible journey, and I hope you found it as insightful and inspiring as I have. Remember, you have the power to create the financial future you envision. So take what you've learned, put it into action, and start building the life of your dreams. Thanks for joining us on this deep dive. Until next time, keep learning, keep growing, and keep building your wealth, both financial and beyond.